Hey, good evening, friends. We're live again tonight. Episode, I think it's 118. Yep, episode 118. Wanted to talk tonight about inflation and about Bitcoin. I've got almost all of my platforms live tonight: Twitter, Twitch, DLive, YouTube, Facebook, multiple Facebook pages, groups. So I'm including everyone tonight. I have connections with coaches, with network marketers, with my YouTube channel kind of transitioning into talking about investment. But, I traditionally have talked about technology. I will continue to talk about technology at times, and Bitcoin and the blockchain and cryptocurrency and things being tokenized would appear to be the future. It remains to be seen, obviously, but the narrative is out there to support it. The technology is there to support it, and the desire of people to have more freedom, to know that their information is secure, to know that they can not be discriminated against for loans and all kinds of things that the blockchain brings, a store of value. And that leads to the title, talking about is Bitcoin or in parentheses crypto really a hedge of inflation? And why would I say that? So we're going to talk about all those things. We're also going to talk, a little bit about some new altcoins that I've been looking into that you may want to evaluate, do your own research on, look into possibly adding those to your bag, as they say. I will say at the onset, this is not should not be seen as financial advice, but my opinion, things that I'm looking at, things that I'm doing. So look at this as entertainment, education, but not financial advice. You do need to do your own research, make your own decisions, but we do want to be a part of the conversation, if you will, and share, my thoughts, where I'm going with different things. So I am going to refer at times to some articles that I printed out, some notes that I wrote down, all those kinds of things. So whether you're watching live or the replay, would like to believe that I have some really insightful things to share tonight, and want to ask you to hang with me throughout. And I'm also going to, real quick, refer you to Twitter. Come follow me on Twitter at Shane Trammel. You can see how that's spelled up at the top. Come follow me on Facebook at Shane Trammel1. Also on YouTube. If you're not watching this on YouTube, please come and get connected with me on YouTube. Subscribe. Turn on notifications. I've just put the information in the comments. So come check me out on YouTube, shanetrammel.info/YouTube. Subscribe, turn on notifications, all the things. So we want to get started, and we're going to talk about, first of all, some things in the news, even just today and yesterday, just over the last 2 days, that I believe, and every day more things are coming out, which would, I think, solidify the idea, the thought that Bitcoin and cryptocurrency more broadly is here to stay, is where much of our finance, it's called DeFi, where, right now you have fintech, which is PayPal, Stripe, all of those kinds of things, Venmo, PayPal, all really good services that in the back end are still connected with traditional banking, whereas, the blockchain and DeFi, standing for decentralized finance, is going to revolutionize everything, democratize, if you will, and help those that can't have a bank account, those that can't don't have the ability to interact with a traditional banking environment, they will no longer go unserved, and especially in undeveloped parts of the world, or what I guess many times is referred to as third world countries. Some blockchain technologies like Cardano actually is focusing on those areas, the continent of Africa, although it will certainly benefit all regions of the world. They're focusing on those that arguably need it the most. So let's talk about Bitcoin and crypto and inflation, and is it truly a hedge? And I'm going to answer that by sharing mostly some information that I know, trends that I'm seeing, and then you'll have to come to your own conclusion. And I'm going to first ask a question by trying to answer the question: is gold a hedge against inflation, and how and why? And I've never been a big gold person, so I'm not going to actually answer the question, but I'm going to pose it because it's certainly believed that it is. Silver as well, and other types of assets. And we're going to talk a little bit about why are we even asking this question? Well, one of the reasons we're asking this question is because it was just announced, I think today. It might have also been in the news yesterday. It was definitely in the news today that President Biden is looking to come out with a $6 trillion budget for 2022. It at some point by 2030, I believe, is up to $8 trillion. We in 2020, and I guess up into including 2021, where we're at in 2021 here in the United States, we have printed, not physically, but created. Some of that's printing, I guess, but we've basically created out of thin air, 25% of all dollars ever created in the history of the United States were created in that time frame. So 1/4 of all U.S. dollars ever created in all the different forms that it's created: print money, treasury notes, stimulus, all the different things. 1/4. Now, that's, I think, only maybe about 1.5 trillion, maybe 3. I'm not exactly sure, but we're talking about an annual budget of $6 trillion. I do not see how that is not going to drive us into serious inflation, if not at some point hyperinflation. There's no indication that that the central banks, the Federal Reserve, and their fiscal policy and monetary policy will. I don't believe that they will ever see a way around doing what they do, which is just creating more money, putting more money into the supply and driving us to greater inflation. We're already in an inflationary period. A lot of these economists that have tons of years of experience, got a lot of letters behind their names, speak at conferences all the time, sit on the different the Federal Reserve or reserve banks, all kinds of things, advisors to the presidents, all that. Many of them would say that we're not really in an inflationary period, and even if we were, that it would be transitory, which means, in other words, it's only temporary. It is moving along and will be good to go. But the reality is that we're more likely, CPI, Consumer Price Index, I think, came out at about 4.2 or 3%, something along those lines, higher than what I think a lot of economists thought it would come out to be, but woefully under what we're most likely really experiencing. Something more like 15 to 20% inflation rate is more likely what we're in. So it's hardly transitory. It's hardly just 4%. So more than ever, people are looking for something that, as they earn, U.S. dollars in this particular case, but it's the same around the world. But as people earn money the traditional way, Where can they put it where it won't be worth less than it was the day before? And one of those places that many people are, now moving to is Bitcoin or other cryptocurrencies, but Bitcoin especially being thought of primarily as the digital gold 2.0, potentially even the successor, who knows, to the dollar as the world reserve currency. We're probably a ways away from that. We're at about almost $2 trillion total market cap for cryptocurrencies. Bitcoin dominates about 40% of that, so you can do the math. I'll show you here in a minute, but it's about 730 something billion, and then all the other cryptocurrencies make up the rest. Bitcoin has dominated as high as 90, 80, 60%. It has gotten lower dominance-wise, market cap-wise, as technology has introduced other blockchains, but as a store of value, as digital gold, it is seen still by many as the premier asset for that. Gold is not easily transportable. Gold is not easily divisible. It's not really even easily used to buy goods and services. The cost to acquire it, typically you have to pay, $50 or whatever it is an ounce as a premium. Some of the transaction costs for getting Bitcoin can be that high, but if you're smart, you buy it in the right places, you can get it at almost zero cost. There's obviously a spread, and I highly recommend Voyager. I talked about Voyager at length last night, so you can go watch that stream as well, but I've got a link down in the bottom, and if you've got questions about Voyager, you can put them in the chat, or if you're watching the replay in the comments, I'll be happy to get back with you. And I use them. They have a good array of altcoins, as they're called, and you can get Bitcoin and Ethereum there as well. So let's get back to talking about, is Bitcoin, and I'm going to focus on that for a minute, truly a hedge against inflation? And I believe the straightaway answer is yes. It's not physical. That's one of the arguments that many people use about how in the world could Bitcoin be a true store of value when it's not physical. It's not like gold, which is physical. It's not silver, which is physical. Well, that is certainly what we've thought of traditionally, but here's the question I have with someone that uses that analogy is, okay, yes, gold is physical, but what makes it valuable, right? What makes it perceived as a store of value? It is the fact that it's believed, that others believe that it's valuable, that others are willing to give you something in return for that gold. And so I would certainly argue to the extent that that's true for Bitcoin, and it is in the current environment that we're in. And I think that we're only going to see that improve more if people believe, put their faith and trust in it, that it is valuable, that it can be used as a store of value. And by the way, some of the pluses, and I'm not going to be able to articulate them all as well as others do, but Bitcoin is highly divisible, which means as it approaches $1 million one of these days, it will be $1 million. It may be 5 million. We're talking even within the next, before the year's out, before 2021 is out, there are those that are suggesting that it's definitely going to get to 100,000. Some say 250,000. Now, it has cycles and it will go down. And what most people, if they're smart, get it now at a discount. You celebrate when it goes to 250, and then when it goes back down, like it always does, to 40,000, whatever it is, 30,000, in the interim time as it's working its way up, then you save enough money where you can buy at the dip, and now you have 2 Bitcoin instead of 1, or now you have 1 Bitcoin instead of a half of a Bitcoin. And then when it goes back up again in the next cycle to 500,000 or a million, then then you've got a true store of value. And I could go on and on and on about the other things. I mean, if interest rates continue to be at near zero, 2%, 3%, or whatever, and as long as you're still earning fiat money to basically kind of replenish, you could literally, with even today, it'll only be even easier and probably more well-defined and better understood, borrow against your Bitcoin as collateral. Now, I'm not suggesting you do that. I'm suggesting you could. If you've got an asset like Bitcoin that is, let's just say, increasing at 100% a year, and you can borrow 5%, take a 5% loan, that's a no-brainer. You keep the Bitcoin and you borrow if you actually need money. There's one aspect to that that's can be a little bit difficult. Obviously, the volatility of Bitcoin. The volatility of Bitcoin also is seen as a good thing in the interim. And what I mean by the interim is it is believed that at some point in the future, I don't know if that's 5 years from now, 10 years from now, 20 years from now, but the thought is that at one point in time, it will level off, where the volatility will be not near as much as it is now. Once the supply is fully in circulation, only ever will be 21 million Bitcoin. That's one of the reasons that it is a good hedge and a store of value. It's scarce, it's limited in supply, which means it will always and maybe at some point to a lesser and lesser degree, but it will always be highly sought after and appreciating in value. So something that people want, something that people assign value to, something that people will actually allow to be used to pay for goods and services, that type of thing. Those are all the hallmark signs of something that is not only a hedge, but also, in essence, the same thing as a currency. Now, Bitcoin is technically not a currency. That's why it's treated as a asset, basically like real estate. So one other thing I'll just mention real quick, especially for those that are new, if you start buying Bitcoin, just be aware that if you sell it, even at a profit, obviously at a profit would be great, but if you sell it prior to holding it for a year and a day, then you're going to be paying your standard income tax, whatever your tax bracket is, on the profit. Whereas if you hold it, a year and a day, basically over a year, then you're paying long-term capital gains, which for most people is going to be quite a bit less than your standard tax rate. So, would love to have your comments, questions, thoughts. Bring them on, and we'll talk about them. So, all right. So let's get into. I want to bring up one of the points that I was thinking about as I was preparing to go live, and that is, again, people. One of the objections to Bitcoin is being truly a hedge against inflation, and anything that is a store of value, right, and that appreciates or at least stays up with inflation, that type of thing, is a hedge, a protection, because it is a store of value. So that's kind of synonymous. But when I was preparing for this live stream, I got to thinking, what other things are, in essence, a hedge against inflation that are not physical? And I thought, what about your brain? What about your mind? What about your abilities and talents? Those are a hedge against inflation as long as you can continue to offer those to the world, right? If you have special knowledge, that is a hedge against inflation, because you can always, people will be wanting to pay for that knowledge that you have, or that special skill. I believe as we progress in this world, as technology automates many jobs, for example, that are done today by actual people. As that occurs and happens more and more, things like people that can weld, people that are artistic, people that are musicians, people that can build things with their hands, those things are going to continue to be valued by people because it will keep them grounded in the things that we all enjoy, the things that are created by human hands, the thoughts that are expressed by humans. We will always, I believe, as humans, want to have things that are expressed by and created by humans. So, but as we, move to digital currencies, for example, as we move to even medical procedures being done, by robots, as crazy as it sounds, or at least by doctors that are controlling robots and maybe dealing with the finer types of things. That may sound far-fetched, but I guess the point is, as technology begins to displace certain jobs, those are going to have to be replaced by something else, and that's going to be a really interesting thing. That's a whole nother topic for another day. But so again, President Biden is wanting a budget approved of $6 trillion. If you ever did think it was time to get serious at some point about investing in something that will protect your hard-earned money, now is certainly the time to be doing that. Bitcoin, other cryptocurrencies, I've spent literally, almost 3 months now, just consuming as much as I can. I still have a lot to learn, but I'm absolutely 110% convinced that Bitcoin especially, and then a select few of the other cryptocurrencies that are out there, and maybe some that have not been invented yet, should be a part of your investment strategy. Bitcoin, if nothing else, definitely Bitcoin. I saw an article, and not that it's all about this, but an article that said basically, and it's talking about the future, not quite yet, literally today, but in the future, if you don't own, you can't be rich if you don't own Bitcoin. Now, Bitcoin, literally for anyone, is still obtainable. It's today at about, and I'm going to show you a chart here in just a minute, but today it's been in the $37,000 range to 38 and change, I think was the highest that it went. It might have gone to 40 today. I think it did. Back down to 37 or so right now, I believe. But because it's highly divisible, you can literally buy a dollar's worth of Bitcoin. Not only that, you can actually sign up, and I brought this up last night, and I'll actually bring it up here for a minute. I talked about this last night, but there's a company called Lolly, and with that, you can actually earn free Bitcoin. So I highly recommend that you do it. Actually, I'll just leave this up. So strammel.info/lolly, and you can get the app on your phone, either iOS or Android, and earn Bitcoin when you buy things on Best Buy or Flowers.com or one of those, or Nike, Adidas, Cabela's. They've got over 1,000 different merchants to where you basically just have a Chrome extension installed on your computer, if you're doing it for your computer, or you do it from your phone, and you can earn Bitcoin that way. Or you can open up a Voyager account, and again, I'm not going to talk about this at length, but you can open up a Voyager account and earn up to 10% interest, literally, on the equivalent of your US dollars. So why would you leave a large portion of money in a bank or a savings account, any type of fiat account, when you could earn 10% interest on it? Obviously, you can earn even more in Bitcoin and a number of other cryptocurrencies. But if you would just want to get started in something that's better than having money in your bank, then go to Voyager, strammel.info/Voyager, get signed up, transfer $100 over there. Just put that in what's called USDC, earn 9%. You can earn 10% once you get involved in one of their loyalty programs. I'm not going to go over that right now because I don't want to sound like a salesman, but I wouldn't be talking to you about it if I wasn't using it myself. A good portion of my portfolio is on Voyager. Some of it is on Robinhood, but I'm transitioning almost everything to Voyager once Robinhood allows you to withdraw. I'm not sure yet whether I'll leave what I have in Robinhood or not. Actually, I may, because Robinhood has also come up with a plan to allow you to participate, you being, just all of us, just regular people, participate in IPOs or initial public offerings. Traditionally, only if you had an inside or had lots of money, all those kinds of things, and knew how to hang with investment bankers, that type of thing. Only then would you be able to get in early on an initial public offering. Normally the thought is, with an initial public offering, obviously you get in early before it is brought to the general public. And then the thought is that the price that initial day is going to go up beyond what you bought it at, and you can turn around and sell it that day or keep it for a longer term investment. So Robinhood has its place. They've had their problems, but they are truly helping with democratizing the financial system. And I want that to be a recurring theme with what I talk about. I do like that term, that thought about democratizing these things, like being able to get a loan regardless of the color of your skin or the political affiliation you may have, or any number of other things, what part of the world you live in. If you have the collateral, basically, if you have crypto, that type of thing, then you can take out a loan. I would say, obviously, don't operate on debt if you can keep from it, except where debt, it makes sense, like arguably in real estate and some other things, but I'm not a big proponent of debt as such, especially now with crypto. Much more a proponent of working hard, earning as much fiat as you can, putting as much of that as you can into crypto and other assets. Here's the thing about inflation and about creating money and all of those types of things. Ultimately, if that benefits anyone, it mostly benefits the rich, those that already have assets that are that can stand the test of inflation. What I mean by that is durable type assets like real estate. Sounds silly, but guns, watches, various paintings. In other words, things that will be always to a certain extent in short supply, or depending on the political climate, may be hard to get, or again, things that are unique, one of a kind, paintings, all those kinds of things. And the average person is not going to own a Monet or a Renoir or Da Vinci or some of those kind of things. They're not going to do that, but you can, if you start right now and just do something literally every month or every week, just do dollar cost averaging, buy some Bitcoin, maybe buy some others, you would be surprised after a year what you would have and what it's going to be worth in the next 5 to 10. That's, I don't know how to say it any other way without sounding almost just radical or crazy about it, but it has literally transformed my way of thinking with regards to investing. There's all kinds of other aspects of life that are the same for me. Some of the things that I'm still interested in, technology. I'm still a Christian. Those things haven't changed, but the investment part of life, or trying to protect your wealth. Wealth is just what you have. I don't mean wealth in the sense of I'm wealthy, someone else is poor. I'm talking about whatever resources you have, especially in the form of the money that you have. If you want to protect it, the old ways of doing it, putting it in a piggy bank, or putting it at a real bank, or putting it under the mattress, that's not going to work when we create $6 trillion, out of thin air. No, that dollar that you had that bought a loaf of bread, I'm just using that example, is only going to buy you a half a loaf, and then the next year, if not sooner, a quarter of a loaf. So you're going to have to add more on top of that. And we all know that wages typically never keep up with inflation, especially when companies know better. Here's an interesting thing to think about. So most companies, and I'm sure there are exceptions to that, if they are even giving you a raise, inflation adjusted raise, they're going to use the CPI, Consumer Price Index. Consumer Price Index is flawed. It was changed at some point in time. I don't remember the actual date, but I believe that it used to include like food and housing, that type of thing. They stripped some of that out because they had to, because otherwise it was just going to be a ridiculous number. And the last thing they wanted to have to say is that inflation is 9% or 10%. They want to be able to say that it's lower than it is, to keep most people thinking that everything's okay as they continue to print more money when it's not. But think about this. So let's assume that you get a 4% raise, which many people don't. Year after year, they still don't get anything more. And let's say inflation is actually 10% instead of 4%, where you're, and you got that, you're still losing 6%. Let's call it 10% to even be more realistic. 10% of your purchasing power every year. In 10 years, you've basically at zero. Basically, your money, all things being equal, in 10 years, your money would be worthless. So I guess I'm trying to paint the picture so that you understand that if you're not doing anything right now to protect your wealth, your money, then now's the time to start thinking about what you should do. Again, it's not investment advice. It's my opinion. But for example, I'm not going to talk about the amount, but I have basically a pension plan from a company that when I left, it had been vested, and it's been several years ago, and I've honestly not touched it because, it came with the 20-page document talking about all the different options that I had, and I've just been sitting on it. And as it turns out now, in one sense, that's been good because it's at least been earning 3% interest, and you can't get that anywhere now. That was locked in. So that turned out well. It's actually grown a little bit, and now, thankfully, I woke up and, cryptocurrency kind of became a thing in my mind. And now I've spent hours and hours and hours studying it. And now I actually see, not that I'm going to put the whole amount into crypto, but a sizable portion of it will go there and it will grow. And here's the reality. You're gambling no more. And I don't think it's a gamble. I think it's much more calculated than a gamble, but I'll just use that terminology for a minute. You're gambling no more in putting your money in cryptocurrency than you are gambling in assuming that the federal government is going to do something to all of a sudden make your money worth more again, and they're going to somehow create a deflationary environment where you somehow catch up. It's only going to get worse. That's the logical conclusion. If somehow it gets better, I'm all for that. But I think that you are best, you're doing the best that you can by preparing for, the things, given what you have in front of you right now, the information that you have in front of you right now, and the information you have in front of you right now, at least having watched this stream, and I'm not suggesting you didn't already know it, but that is that if it's passed, even if it's 3 trillion instead of 6, that's crazy. But $6 trillion, and over a 5-year period or whatever it is, leading up to a budget of $8 trillion a year, we are headed for serious trouble with regards to what our hard-earned money is going to be worth. So again, I hope that you'll share this out. Come over to YouTube, capture the link. It's in the comments, actually, if you scroll up enough, and I'll put it in the description. But share that out on Facebook, Twitter, wherever you're active on social media. Maybe some others will find a reason to watch it and maybe get challenged with the fact that, ignoring, I thought about this today and I actually wrote it down and now it's coming back to my mind. Ignoring something because you don't understand it, that's not going to get you anywhere. That's not going to do anything for you. If anything, it's going to be to your detriment. I think I actually tweeted that today. And so again, by the way, come follow me on Twitter. If you don't have Twitter, get signed up for Twitter. Maybe you don't like Jack Dorsey. I get that, but it's a really, really good way to share information. I share a ton of resources on Twitter. If this interests you in the least, then go get signed up. If you're not on Twitter, follow me on Twitter at Shane Trammel. I'm also on Instagram at Shane Trammel. And then on Facebook, it's a page actually, Shane Trammel 1. And go check out Voyager as well. Wanted to give you one other thought with regards to legitimizing, if you will, Bitcoin, especially Ethereum, and some others, but especially Bitcoin. There's a reason why the largest banks in the world, not all of them, but many of the largest banks in the world, hedge funds, largest hedge funds in the world, the CEOs and founders of those hedge funds, some of the largest corporations like Tesla, MicroStrategy's not necessarily large like Tesla, but billions of dollars for all of these different organizations investing in Bitcoin, investing in Ethereum. Apple hasn't come out and just straight away said that they're going to, implement Bitcoin in the Apple Pay and in their wallet, but they're behind, so they're definitely going to do it. They published in essence, a one ad looking for someone with experience with blockchain, crypto, all the things, because they're behind. Stripe already does Bitcoin and other cryptocurrencies, PayPal, Venmo, and a host of others. There's a company called BitPay where you can basically use a credit card and pay for things with your crypto. Now, I don't actually recommend that you spend on everyday items an appreciating asset. That makes no sense to me at all. But if you've taken a lot of profits, let's say on Bitcoin, and maybe you want to buy a house or pay off your mortgage or some of those kind of things, that might make sense. But even a mortgage, if you're earning 100% or so a year on your Bitcoin or other crypto, and as long as you can actually make that interest payment at 4% or whatever it is, it makes no sense to pay it off, other than if peace of mind. If you want that peace of mind, sure, do it. But purely on paper, financially, that would make no sense. So continue to pay on your home. But if you get crazy wealthy, then sure, after a year, sell enough of your Bitcoin to either buy a house with cash, pay it off, be out of debt in that way. So, hey, James, I want to see gold at Fort Knox to back up the dollar. Yeah. And you make a really good point, James. I'm not going to knock gold and the gold standard. I think, honestly, at some point it probably would have changed anyway, but I believe it was 1971. I know it was Nixon when he did what he did. That was the beginning of the end in many ways, right? With regards to fiat currency, every major nation in the world history that went to a fiat-based economy without it being backed by some kind of hard asset has eventually failed. I don't know how long that's going to take for the United States. Obviously, as an American, I do love the United States. I don't have a problem saying that. We have our problems. We have leaders that honestly don't know what they're doing. They're just doing what has always been done. Nonetheless, what do they say insanity is? Doing the same thing over and over again, expecting different results. All they have to do, all the Fed has to do, all the central banks all over the world have to do is look at history and see that it's either pay me now or pay me later. They all decide to kick the can down the road, pay me later, and it will eventually come to bite us. Now, I do believe that those that choose to put an amount of their wealth in Bitcoin, that could fail. It's got 10 years, 12 years now of history, progressive history, where it's become more and more believed to be a true store of value. And I just listed, corporations, even nonprofits are now taking, big nonprofits like American Red Cross, United Way, many others. I actually am the president of a nonprofit, and I'm trying to work through whatever we need to be able to accept Bitcoin and other cryptocurrencies as well, and want to start a fund where we actively actually recruit, if you will, financial support through cryptocurrency to basically, hopefully, self-fund our our cause. So in the future, we don't necessarily have to ask for money. So yeah. $30 trillion in the hole is soon more, I guess, that the ship has sailed. Yeah. I mean, guys, we have to take on this responsibility for our family and for our legacy ourselves, right? I sat on the sidelines of this particularly crypto, Bitcoin especially, for 10 years. I've known about it for 10 years, wished upon all wishes that I had taken it as serious as I've taken it now 5 years ago. But hey, as they say, you can't cry over spilt milk. Thankfully, I have fuel in the fire now, if you will. Now, I can't imagine, honestly, not being a part of this movement, if you will, until it's goes to zero, which I don't think it's ever going to do. You can't predict the future. You can only prepare for the future based upon the knowledge that you have right now, hopefully with critical thought, with doing the best that you can do with the information that you have. That's all that anyone can be expected to do. It's just like an entrepreneur. Some of the most successful true entrepreneurs failed multiple times before they had either their final success, or failed many times, had a success, failed again, that type of thing. I mean, I'm sorry in one sense, but I'm not. It's called risk reward for a reason. You have to determine for yourself what you're willing to risk. I literally thought, again, before coming on to this live stream, I'm to the point now, I'm not saying everyone's there, I would rather risk going down this path and then turning up that it's 60. I'm working at Walmart. If I have to do that, I'll do that. This is not what I'm not advocating for, and please hear me on this, because I'm not advocating that you just go put everything you have into cryptocurrency and just sit back, do nothing, don't work, all of that, and just hope. No, I'm not suggesting that at all. I'm suggesting, based upon at least what I know now, having spent 3 months, hours and hours of research, watching videos, listening to experts, doing my own research, all that kind of stuff. I'm convinced enough that I want to move forward with that, and obviously stay active in what you're doing. Continue to earn as much fiat currency as you can so that you can put more in what you believe will truly be a store of value. That's my approach. My approach is to, or my approach is going to be, for the most part, to invest as much as I can, buy when it goes down, to invest more, dollar cost average as well, and then at some point, sure, take profit. Who knows where things are going to go, but as long as I can earn fiat currency for everyday type things, I'm going to continue with that. I'm not going to stop. I don't believe in putting all your eggs in one basket. My approach would also be, as hopefully cryptocurrencies do, I'm up 40% right now. Market's kind of down. I was up as much as 130, I think 4 or 5%. My strategy would be, and again, this is not financial advice, but my approach, as one of the reasons I would and will take profits is to acquire other assets that are also hedges against inflation. Real estate, I've already mentioned some of those. Real estate, other assets, it may sound crazy, but like watches, for example, or a number of other things. Ammo. I'm from Texas, so I won't necessarily hesitate to talk about that. Firearms, all the different kinds of assets that typically will, that there will always be people that will want. When they're in high demand, they'll pay a premium for. So I'm not suggesting that you 100% put all your money in Bitcoin, but maybe you put a healthy amount in there, let it grow 10x, maybe even 100x. Take some of that out after at least a year and invest some of that in other assets that will also help you not only protect your wealth, but grow your wealth. So that's where I'm at on that. So I did want to also, that's where we're going to go next. So that's pretty much what I have to say about Bitcoin as a hedge against inflation. I absolutely believe that it is. I believe that it is, if for no other reason, in summary, that hundreds of thousands of people also believe that it has value. There are, again, underdeveloped or countries, Nicaragua, I believe, and all kinds of places in other parts of the world where their financial system has collapsed. Exactly what may happen here in the United States and in countries where they've even officially banned it. That again, if you have that in these wallets that the government can't quote unquote control, you can still use it, and they are using it to basically have a quote unquote underground economy. So there is proof that it's truly is not only a store of value, but a means of exchange. And that basically defines money. Although it's not legal tender in the United States, it can act as both a store of value and a means of exchange. And I think that's awesome. So what I want to do next is I'm going to take that off. So go check out Lolly as well. Go check out the description. You have to come to YouTube or Facebook, I guess, for that matter, to see the full description. But I got a number of links, and I just want to briefly talk about those, and I'm going to move on to some other things that I think you want to hear about. But I have all of these. I have a Robinhood account, so you can get some free stocks with that. I have a Webull account. You can get free stocks there as well. I have a Voyager account, and that's where I'm doing most of my buying and selling, mostly buying of crypto at this point in time. A really good platform. They're having growing pains like most of these. They're bringing on, they've already got 1.6 million users, verified users. They're pushing to have 10 million on their platform before the end of the year. That honestly will only make the platform better, because if you're going to have 10 million people on a platform, you have to have it solid and working, or you're going to be out of business before long, because 10 million people screaming doesn't work out very well. Robinhood, again, has its problems, but they have truly democratized in many ways the ability to not only buy stocks, but also a certain amount of crypto. The thing I like about Voyager compared to Robinhood is a lot more variations of crypto on Voyager. A lot of the ones that I wanted to get, I can now get on there. VeChain, for example, Cardano. I talked about those more last night. So that's done on that. So go look at the links in the description. I also have a little bit of money in BlockFi. You can earn interest in Bitcoin. So that's what I'm doing. I have fiat currency there. Or no, actually I don't. I take that back. I have $100 worth of Bitcoin, and I'm earning interest in Bitcoin. And I did that when Bitcoin was at about 35,000. So I got in at a really good point. I wish it was when it was at about 23 or whatever, or even back when it was 4,000. But nonetheless, I think the theme of this is, if you don't catch anything else, there are a number of ways to incrementally gain more and more Bitcoin, especially in this particular case, I'll say to accumulate Bitcoin. And again, as you progress and have your own wallet, you could consolidate, have that all in one place. And I'll also say, for those that are curious about where are we at in this cycle, because last Wednesday, there was a crash. Basically, Bitcoin went down more than 50%, Ethereum close to the same. We're not back up to the all-time high or even the point where it crashed, but some good indicators are, and actually I'm just going to pull up my Twitter feed, because that's the easiest way for me to talk through some of this stuff. Let me switch here. Sorry. Okay. So I want to talk a little bit about some of the things that are going on, and it's helpful for me to just use my Twitter feed because it kind of becomes a note. So I can't see the comments right now, but I'll come back to them in a minute, so please hang with me. Okay, so we've already talked about inflation. Dogecoin and some of the other meme coins are kind of down right now, while many of the altcoins and Bitcoin have kind of been hovering. I'm going to show you a graph here in a minute, or sorry, not a graph, a chart of Bitcoin, and make what I think is a pretty interesting observation. So hang with me. I want to get to that. Again, whether you're live or watching the replay, hang with me. Got to get through some of these other things. So I highly recommend that you come follow me on Twitter so you can click through some of these things. But I like Dan Held. I think he is a good subject matter expert on crypto in general, certainly in Bitcoin. And so if you follow me on Twitter, you can see that I retweeted this here, and he talks about FUD. FUD, for those that don't know, is fear, uncertainty, and doubt. There's certainly a lot of that right now. Going back to Dogecoin for a minute, it is at one of its lowest points with regards to volume. And of course, when you have low volume, you're not going to get that particular coin or token up much beyond where it's already at. So Dogecoin, for it to see any gains, there's going to have to be much larger volume. But go check out Dan Held. I would actually go follow him. I would also go follow Digital Asset News. I'm not really sure what this guy's name is, but I really like him as well. I'd mentioned already, but PayPal has already been allowing you to buy and sell Bitcoin for a while now, but they originally did not allow you to basically transfer that from another person on the network or put it in your own local wallet. They're going to be coming out with that. I don't know the timeline on it, but they are. So that's cool. There's another YouTube channel called Coin Bureau. I suggest you go check that out. It's another Dan Held. Okay, here we go. So this kind of reiterates what I was saying, which is to say the fact that people moved to stable coins rather than moving out of crypto entirely feels like a under-discussed aspect of this cycle to me? Could this make future bear periods less severe given easier reentrance? So let me explain that for those that may be new to this. What he's basically saying is, when you buy cryptocurrency on one of the bigger exchanges, most of the exchanges like Binance or Kraken or Gemini or Gate.io, and I have a link in the description for most of those. And with most of those, you get something, $25 in Bitcoin or a number of different things. None of these platforms cost you money to get set up with them, so I suggest that you actually sign up for all of them, because in some of these highly volatile times, if you really want to get in on a dip, for example, that's where I would think you would not, mostly because you want to sell, because I don't suggest you sell very often. Just wait, it's going to go back up. But if you want to get in on the dip, sometimes some of these exchanges actually go down. In other words, they are not working because the volume is so great. And so if you have a couple of different accounts, you can, if one's not working, you can get in on another one. That obviously means keeping a little bit of money on each of those. And that's exactly what he's saying. When people decided to sell their Bitcoin or whatever it was they were selling, they didn't just pull their money out and put it back into a bank. They put it into what's called a stable coin, like USDC or USDT. And these stable coins are dollar, basically pegged to the US dollar. So they're, generally speaking, worth $1. So if you sell a Bitcoin for $36,000, put it into a stable coin, you have $36,000. And if you sold it for 36 and it goes down to 29 and you want to get back in at 29, then you can use that stable coin as it's basically like having a bank onto the exchange. And then you can buy whatever asset, whatever crypto you're wanting to buy. So he's basically saying the fact that they kept it there suggested that they weren't getting out of the market completely, but they were, waiting for a period of time when they wanted to get back in. And he's saying if people do that in the future, then maybe these bear periods, which is basically, in a downturn, maybe those will be shorter. Everyone likes the bull cycles because things are just going up. Okay, so Glassnode is a source of all kinds of good data. The best of the data is available only if you have a subscription, but nonetheless, as Bitcoin price falls, the supply of the big three stablecoins, USDT, USDC, and DAI, have continued up and to the right, which is good. And during this sell-off, look at this, 14 billion in USDT, 9.7 billion in USDC, and DAI, which I don't really use or think that much about, 1.22 billion. Flat to safety or dry powder, either way. So dry powder is just to basically say, hey, I've got money on the side ready to deploy when I'm ready to buy more crypto. This is really interesting because I live in Texas. Texas passed, and it's waiting on the governor to sign now, a virtual currency bill, which should attract a number of industries and companies to come to Texas to further the cryptocurrency ecosystem, if you will. Texas is already home to the largest Bitcoin mining company in the world, from what I understand. So this is good for Texas. Kathy Wood, you may or may not know, of ARK Invest, is still very bullish on Bitcoin, especially. She bought more of it. They own a large portion of Tesla stock, which obviously Tesla owns still, I think, $1.5 billion worth of Bitcoin. She believes that, not necessarily in this cycle, I don't think, but she believes that Bitcoin is going to 500,000. So there's no shortage of quote-unquote experts that believe that Bitcoin is going up higher and higher. And I'm going to come to the comments here in just a minute. So hang with me and let's talk through some other things here. Here's an example of someone having a really good experience with Voyager. I'll also highly recommend that you follow Raoul Pal. I think I'm saying his name right. Just a very articulate macroeconomist. I've not seen there's not a single thing that I've seen by him that I wasn't just in awe of with regards to the value of what I was getting. Here's another interesting thing. It's still going to be pretty small, but he believe has a 25, 50, 25 kind of approach with his investment. 25 in Bitcoin, 50 in Ethereum, and then another 25 in these other altcoins. So he's got, and this is his exchange portfolio, 12.5% in Bitcoin, 19% in Ethereum, VeChain. I highly recommend VeChain, VET, and you can get that on Voyager. Get it now while it's cheap. I got some as low as 10 cents. It's been as low as 9 here in the last few days. It's hovering around 12 right now, but it's still a very, very good deal. VeChain is the premier blockchain that's solving supply chain issues, and get as much of that as you can as far as I'm concerned. I did also want to mention something that again is very, I believe, applicable to my broader audience, whether you're coach, consultant, network marketing, into crypto, whatever. If social media is a part of what you do in any way to further your message, or to in any way, if social media is something you either plan to use or already use, the blockchain, decentralized blockchains are also going to revolutionize that aspect. Not only that, music, movies, shopping, everything. But let's talk specifically about social media. Does he have some here? I don't think he does, but Theta is another one. Theta is basically a decentralized version of Twitch or YouTube. So even the CEO of YouTube, or maybe it was the founder of YouTube, but anyway, they're getting even positive remarks from high level people that either used to be or are involved in YouTube. And then there's also a number of, and I don't remember those, but I do remember. There's one called E&J. We're going to look at that in a minute. And also one CHZ. So the E&J engine is a token that's used by basically an Ethereum-based blockchain for gaming. And it's going to be huge because gaming is huge. I don't have to understand even all the ins and outs of gaming to know that it's only growing. That segment of our world, it will allow people that play games to monetize that. All kinds of things that I'm not going to get into. And CHZ, which is Chili's, I think is the way you actually pronounce the project. They're into. It is used for a fan base for soccer teams and all kinds of things, and I think we all know how big that can be. Some of these soccer teams have millions and millions of fans, and they want to spend money, and they're just radically crazy about their football team. So that's huge. I mean, we're gonna see obviously in the future everything being tokenized. You as an individual, as maybe a brand, could at some point here in the near future, technically could do it right now. It's probably going to become easier and easier. Could have your own token. So I could have $Shane Trammel or $Shane as a token and figure out ways to monetize that, which is just crazy. And what's crazy about this and good at the same time is, hopefully before long, in many ways, gone are the days where the only choices you have, I say choices because I'm not suggesting there's not going to still be a place for Twitter and Facebook and Instagram and all those, but as the blockchain technologies give people choices, people could completely disconnect from these centralized platforms where, what you get is a free use of something, but you don't get anything else in many ways. Think of musicians where traditionally a large portion of what they make, or a large portion of the revenue, I should say, generated goes to other interested parties, whether that's their agents, managers, record labels, all that kind of thing. And the blockchain, decentralized blockchains are going to flip that on its head, where the musician, where the artist, where the gamer, where the content creator, the YouTuber, whatever, is going to be the one that gets to control what they keep and how much they give, if you will, to that ecosystem. So this was a good graph. I hope you're still with me. Let's go back here for just a minute, and we'll see what kind of comments we've got, if any. So we'll continue to move on. All right. So here's one of those, I guess, experts that I was kind of making fun of in one sense. I don't know anything about David Rosenberg other than let's see. He is the chief economist and strategist of Rosenberg Research and Associates Incorporated. I don't know if I'm supposed to think that that's amazing or not, and I don't mean that in a bad way, but he tweeted and said, inflation. Good grief. This is a stale story. Well, I don't get that, right? I've spent almost an hour talking about, not only are we definitely in an inflationary period, and you don't have to be an economist to know that. Not only is it, 4.2% CPI, it's more like 15 or 20. All you got to do is go look at the cost of a number of things, if you want to call it a basket of services: lumber, food, gas, real estate, all kinds of things. It doesn't take a genius. You don't have to have spent 20 years, 8 years in college and in the industry. Don't have to be an economist to realize that we are truly in inflation. But he says, good grief. Yeah, it's more like noise. Adjusting for the pandemic distortions, guess what? Core inflation is running at 2% and showing no acceleration. What rock does this senior economist, or whatever his title was, what rock does he believe that we live under to believe that $6 trillion in budget new money is not going to cause inflation, potentially even hyperinflation? So sorry I spent too much time on that, but I think he's way off. Okay, this is what I first saw crypto back in 2012. This is Raoul Pal, a new anti-fragile financial system that doesn't break in times of stress, where ownership of assets is clear and losses are not utilized to taxpayers. So I think in essence what he's saying is, recently we had a crash, right? Last Wednesday, the 18th, I think, is the official day that it really kind of crashed. And yes, people lost money, either on paper or in real terms. Many of those, let's just be honest, they had significant leverage. You can call it greed, call it whatever you want to call it. Doesn't really matter what you call it, but the bottom line is, we had a lot of people that had basically, let's say, for $1 they could get 100 of something. So for $1 they could get $100 worth of something, and so highly leveraged. And when the market crashed, their accounts were liquidated. So if they spent $1 million for $100 million worth of something, they lost $1 million, and it was enough people that did that $8 trillion, I believe it was $8 trillion. No, I'm sorry, 8 billion, but that's still a lot. $8 billion liquidated in a matter of hours. And collectively, and I'll show this in a minute as well, collectively, the total market cap for cryptocurrency was at around 2.2, I believe, trillion, 1.4 or something along those lines of that was Bitcoin. Bitcoin's now only about 700 billion of that, so it's still what, 600 $600 billion off. There's tons, 700, this is true, 775,000 different accounts were liquidated, or basically exited, if you will, on that crazy day, May 18th, 2021. But I like this part about is clear ownership, losses, and those losses did not get transferred to the taxpayer. So, like, we didn't have to bail out a bank, right? And that didn't basically cost the taxpayer. So it's not bad. Volatility, if you know how to deal with it, actually volatility is what makes the crypto market so good for those of us, especially that will buy and hold and buy more when it's lower, and just buy a certain amount regardless of its price on a weekly or monthly basis. So let me talk through that just ever so briefly. I really do hope this video gets seen by a lot of people, not because it's me saying it, but I think there's a lot of good thoughts here. But think of this strategy, and I think that I know it's certainly already done well for me. I believe it will do well for me in the future. I guess there's three components to it. Set aside a certain amount of money, and I've even learned a little different approach on this. When I first started, if I had, let's just say $1,000, just spent the whole $1,000 on Ethereum in one purchase. Now that doesn't even buy a full Ethereum, but if I had, especially if you're buying a whole of something, depending on what's going on that day, and if you have the time to look at the volatility, you may want to buy it in chunks over the day, right, to dollar cost average, and to try to get it ultimately at a lower price. Or if it looks like it's just going to continue to go up for the day and you really want in, then spend the rest of your money and get in. But one way or another, you take an amount, let's say you're not into crypto at all, come up with an amount that you're, first of all, willing to lose. You're not likely going to lose it if you pick the right thing to get into. Bitcoin, Ethereum, you can't go wrong with, I don't believe, at this point in time. And since Bitcoin is highly divisible, you can buy a fraction of a Bitcoin. If it goes up 100%, you're still getting 100% return on your money. So think of it that way. So set aside an amount that you're willing to lose, that you're not likely to lose, but be willing to lose it. That's the first thing. Second thing is, set aside, to make it easy, maybe it's a monthly amount that you just have automatically going into, let's say, a Voyager account to buy Bitcoin, $50 a month, whatever it is, regardless of the price. And then a third element of this is strategically have some money, again, let's say on Voyager, earning 9% interest, ready to deploy when there is a dip. When Bitcoin goes from 45,000 down to 20,000, for example, and maybe you have enough in there to buy a full Bitcoin, that would be amazing and awesome. Or maybe it's a fourth of a Bitcoin, an eighth of a Bitcoin, whatever it happens to be for you. Whatever the scale is, the concept should be the same, which is, again, initial investment, whether that's within a week, smaller investments to get that initial seed investment. However you go about that, that's number one. Number two, recurring dollar cost average investment. That's number two. And number three, work up to, if you don't already have it, work up to an amount that you can have in a stable coin on something like a Voyager that you can deploy when there's a dip and take advantage of those sales. That's what I would say. So think that through. Let's see here for just a minute what other comments we may have. Okay, so we've been going already an hour. We're going to go back just for a minute here and talk through a few other things that I wanted to cover. So a major asset class crashed 42% in 14 days, wiped out 1.02 trillion in value. And there was liquidation of people with up to 100 times leverage. With very low regulation, many tokens fell up to 70%, including unregulated lending and borrowing business. So he's saying something to get your head around, but yet we still have hundreds of thousands of people investing in it and trillions of dollars in it. A lot of that locked up in high interest bearing assets for individuals. Can't beat that. Another interesting thing, user growth on the Bitcoin network, BTC for Bitcoin. No coiners, those that didn't have any coins, are taking this opportunity to buy the dip. Some no coiners could be those that had been in and coming in afresh and anew. So that's can be a little bit deceiving. But in case you're wondering, the bull market is very much intact. In other words, he's basically saying, not only do we still have, Bitcoin coming off of the exchanges, which means people are putting it back in their wallets, which means they're not wanting to sell it. That's a good sign. People that have not been involved in the past are getting in, buying in the dip. All of those things would hint to the fact that people are still very bullish, if you will, on Bitcoin, and not only Bitcoin, but other crypto. Feels like most FUD is dying down. Again, some of these, to highlight for those that maybe have not been up on this, or maybe you're watching this again on the replay and it's 6 months later, whatever. Again, it's May 28th, 2021. Maybe you're watching this June 28th, 2022, whatever. I think there's still a lot to learn here. FUD is going to always be a factor. It just so happens that over the last 10, 14 days, there was FUD about this dirty mining, right? But the fact of the matter is, over about 75%, it is believed about 75% of mining all over the world is using some form of renewable energy. China is apparently kicking out the miners there, so that also helps with the narrative that many want to spread that, hey, there's too much concentration in China. It's more centralized versus decentralized. Well, and the thought was that it was mostly centralized in China, which that's actually not true, but nonetheless, that will help with that narrative. If they're moving them out of China, we can't say anymore that China has a large portion of the hash rate, as it's called. And then in this recent bull run, the Tether FUD got obliterated. Okay. Look good fundamentally. Here's Lolly, as I was mentioning. Go check that out. Go earn some free Bitcoin. Carl Icahn, a billionaire, is saying, potentially $1.5 billion in investment in crypto, probably in Bitcoin, or mostly in Bitcoin. Plan B is another Twitter account that you need to go follow, in my humble opinion anyway. PayPal, we've already talked about what they're doing. I have a little bit different perspective on Doge now. I've always said that for me, Dogecoin was always an investment. I hope that it would go, from, 17 cents or wherever it was that I got in on it, 5 cents in some cases, up to, I used to think $1,000. It's never going to get to 1,000, I don't believe. Probably will never even get to 100, maybe 10, maybe not. But I was listening to Raoul Paul. He actually says that he owns some Dogecoin, although it's his smallest allocation. But nonetheless, he talks a lot about network effects. He talks a lot of, he believes that Elon Musk is very calculated in what he's doing with Dogecoin, that Elon Musk knows that it's got a lot of traction because a lot of people like it, and there is the reality of a meme culture out there, a subculture that is in the millions. So maybe Dogecoin is something that has some forward potential. Now, is it ever going to, again, get to $20, $30, $40? I don't think it's ever going to perform as well as something like VeChain, which is cheaper right now than Dogecoin. I believe that VeChain has a much brighter future with regards to its potential increase in value. So, but I think it's probably worth having some Dogecoin. Now at 33 cents, hopefully it's a bargain. Maybe it never ever goes below 30 again. Whether it will ever get to $1 or not, who knows? But again, you can't argue that Elon continues to push it and people react when he does. I think they're reacting less, honestly, because again, the volume is proof enough of that. Only 4 billion, when in the past it's been 6, 12, 30, 40 billion, 50 billion. But Dogecoin, probably a good thing to have some of. So here was only whales move Doge. Data suggests major Dogecoin wealth gap. So it is highly concentrated, but if you kind of mimic what the whales are doing, I think you can still do well with that. Okay, so BlackRock's CEO said the company is studying the potential of cryptocurrencies to serve as long-term investments though it's too early to tell. Here's the one last thing I'm going to say, and we're going to end it with this. So I'm just going to come on full screen here. It is, I think it's a foregone conclusion that, these larger banks and hedge funds that haven't decided to do anything yet, or that are still wondering if it's a real thing, like Bank of America and this one and others, the adoption rate is, when you look at it from a total perspective, the adoption rate is still considerably low with regards to institutions, large organizations, companies, the like. So this is, in my humble opinion, again, it's not financial advice, this is the time to get into Bitcoin. There's going to become a point where the demand is going to be so high, in my opinion, again, from the institutions and large corporations that are going to want to put Bitcoin on their balance sheet, that it's going to drive the price up to the point where you may never, ever be able to own a whole Bitcoin or 2 or 3. Over the next 2 or 3 years, I'm just going to postulate right now that will be and of course earlier than now would have been even better, but since we're living in the now versus the past, we're in the golden age of the common man, quote unquote, and I mean that to include everyone, man, woman, child, but the golden age of it still being something that the common person can obtain a full Bitcoin of, or 2 or 3. Are there other crypto assets that are going to outperform Bitcoin? Possibly. But those other cryptocurrencies are probably never going to take the role that Bitcoin has ascended to as a store of value and a medium of exchange, at least at the high-end level assets like real estate, buying a business with Bitcoin, possibly, those kind of things, right? High value asset acquisition. There are plenty of other coins that will continue to be accessible to the everyday person, if I can use that term. If you don't mind me using that term, I consider myself an everyday person, but not Bitcoin. And the reality is it's very possible that it could at some point become the replacement for the U.S. dollar as the world reserve currency, and there's some implications to that. I'm not suggesting it's going to happen overnight, maybe not even for the next decade. But again, if you think about legacy, and if we care about what we leave our families and that type of thing, imagine the legacy that you'd be able to leave if it turns out that that's what is going to ultimately happen. Then you leave your family in a much better position than the one that decided not to do that. Now, I'm not talking at all about a one world currency. I honestly believe, and I'm not going to go too deep on that. I'm only going to say when that happens, I think there's concern for another reason on a different level, but we're not there yet. And that's not even what I'm thinking about. I'm purely thinking about, again, securing and being able to not only maintain, but grow your wealth, keep your purchasing power, be able to continue to work, earn fiat money, put that in an asset or a number of assets, a basket of assets that will be able to withstand the pressures of inflation. Let me see real quick if there's anything else that I wanted to there was one other thing. I'm actually going to start some music as well. Okay, I wanted to show you this. This is a 1 day chart of Bitcoin, and I just want to use it for an example. I'm going to move this here too. So if we look at this, here's the 19th. So this is where it dropped considerably, down as low as 29,000, and it had been as high as 62,000, something like that. Now it's not within this view, but I've got a couple of lines here. I've got a line here, and I've got a line here. I didn't mean to actually have this other line down here, so ignore that one. But I wanted to show you this band. This is just an interesting thought. I'm not suggesting you do this. This is something I would definitely do if I had a number of Bitcoin to play with. And I'll explain. And this is where we're going to end it. This band right here is around 36,000. This lower band that I'm on right here, and this one is around 41. I'm having to actually look over to my right on a different screen. And so that represents what? About from 36 to 41. 36 to 41. So that's $5,000 swing every day. Of course, that's in hindsight. But if you could have basically traded Bitcoin. Let's see, let me count the days where it did it. 1, 2, 3, 4, 5. and maybe today would have been 6 days where you could have, and let's just cut it in half. Instead of 5,000, let's say because you were conservative, 2,500, or let's just say 3,000 because that's easier. So that's 5 days. I said 5 days within a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So half of the 10 days at 3,000, that's $15,000 that you could have made day trading Bitcoin. Now there's a lot of other indicators and things that you could use if you know technical analysis. But you also have to keep in mind there is some manipulation. Again, this is not a regulated market like the stock market is, so there is some regulation, some other things. So I'm not trying to make this sound super simple, but again, I think this shows you a picture of what's possible. And then imagine turning around at the end of those 5 days, or let's say today, and then putting that 15,000 in Ethereum, or buying a half of a Bitcoin. So you could roughly buy a half of a Bitcoin with that, or you could buy 2,000 times 7. So you could, more like roughly 6 Ethereum at about 2,700 or so. So you get the picture. So actually pretty interesting. But I do want to thank everyone for joining, whether you're on live or whether you're watching the replay. Do want to say thank you for coming on. Please, like this video, subscribe, turn on notifications, all those cool things. Follow me on Twitter. Share this out. Watch all the other videos that we've done. Probably the last 50 of them at least. Maybe not quite that many, but maybe the last 50 or so focused on cryptocurrency. You may be interested even in going. My demographic maybe has changed, and I apologize to those of you that joined this YouTube channel. I'm talking mostly that we're maybe joining to hear about technology and all that, but I hope that you are also interested in your financial future, and this kind of a shift for me. I would like to continue to integrate some technology in that, but I do know and agree that channels kind of have to have a niche. I, for one, am interested in a ton of things, and so, but I probably have to be consistent. And if I'm going to be consistent about any one thing, it's going to be about how to be a part of a new economy, if you will, that allows you to participate in building a financial future that you never ever could before. And more so, anyone, right, regardless of your income level, you can start. It's not like, and I'm not saying you shouldn't have aspirations of owning a business, for example. And so this is for my friends that are into coaching or consulting, or maybe you're a live streamer. Anything that you're doing, literally, this could be something that you do as well to help ensure, again, the protection and the growth of your wealth, to maintain and grow your purchasing power as our economies most likely get worse and worse and worse. Hate to be doom and gloom in that one sense, but again, when you're talking about printing, $6 million, 6 billion, 6 trillion, I'll get it right in a minute. It's not million, it's not billion. It's hard to believe, and that's why it's hard to say. $6 trillion. That can't go out and not be consequential. And I believe, I'm not an economist, but I believe that's going to be translated into significant inflation. Only time will tell whether it does or not. Here's the reality. Cryptocurrencies as a asset class have outperformed Standard & Poor, Dow Jones, all of the indexes, all of the best stocks in the world, real estate, life insurance, annuities, any investment avenue that you can think of. The crypto space collectively has outperformed them all, probably many of them even combined together. Past performance is not a guarantee of future results, as they say, so that it's subject to change, but adoption is just growing every day. And so I think the writing's on the wall that over the next decade that cryptocurrencies, Bitcoin, Ethereum, and others are only going to become a bigger reality of our everyday life, and a tool that we can use to, again, not only protect but to grow our wealth. So I will leave it with that. I want to say thank you again. I hope you'll come back tomorrow night again for another stream. Please let your friends know about the channel. It's my humble desire to provide value, to share. I'm wired to share what I'm learning and what is currently of interest to me, and I'm sharing that tonight, and I'll be sharing it in the nights to come. So what I will do is be back again tomorrow night, and we'll do it again. All right, thanks.